On the last trading session of a Friday, gold spot printed a closing price little above $1,743 per ounce. The number is rounded and the market is closed. And on the last week, gold traded as low as $1,721 per ounce and as high as $1,758 per ounce. The numbers are rounded and the market is closed. Gold is trading in a correction and it's below its all daily simple moving averages except the 20 days daily simple moving average. The RSI readings now are moderate on the daily chart, still bearish on the weekly chart, and moderate on the monthly chart. The supports are seen at 1730. If broken, then 1700. If broken, then 1676. And the resistance levels are 1758, then 1770, then 1800. That's all. We'll move on now to the economic calendar. On the economic calendar for the coming week and from the United States, we are waiting for the following economic headers to be released. The core CPI due on Monday, then Philly Fed Manufacturing Index on Thursday, and retail sales on Thursday, and on Friday building permits and other important economic headers. That's all for the economic calendar. We'll move on now to the trading strategy. Hi again, it's always nice to meet you in a new episode of our weekly gold price forecast. In my last video, I told you guys that gold is set to continue its rally with $1,770 per ounce being the target or the maximum target to the upside, providing if it can find acceptance above 1736. And this is what happened exactly on the last week. We found acceptance above 1736, then we rallied to the first resistance of 1758. Then the market sold off and settled somewhere around $1,743 per ounce, and they closed on that on last trading session of Friday. Now this could be hard for most of you to accept, but gold is set to fall with $1,350 per ounce being the final target for this downtrend which we are stuck at the moment. Any upside movement is going to find the resistance, a tough resistance about 1770, and expect the market to turn around and to sell heavily to 1600, then 1500, then 1350 as a final target. As you may know, trends are trends, and gold is trading in a downtrend, while the risky assets like the stocks and the cryptos are trading in an upward trend. And every time these risky assets having a pullback or some sort of a minimum correction, gold wasn't benefiting actually from any sell-off in other markets, which means that investors are not interested to pull out their money from these markets and put it in gold. In fact, they are just buying whatever stocks or cryptos on the dip. And this is what is happening. And these markets are getting extremely overbought. Maybe there is another 5% or 10% to the upside, but after that there will be a massive sell-off. There will be a great correction. And in that case, gold will be liquidated with these other classes of assets. I mean, the risky assets, and we're going to see something similar to what happened in the last March of 2020. Bottom line, I see it justified if gold near 1770 start building a short position with a stop loss somewhere around 1850 with a target of 1500, then 1350. That's all for our video for this week. Thank you guys for watching. I'll see you next week in another video.